Hi, my name is John Kern. I'm the Advanced Planning Project Coordinator at the Maryland Volunteer Lawyers Service. And I want to take a second today to talk about the relationship between advanced planning and tax sale foreclosure. So, advanced planning just refers to the legal documents that allow us to pass assets from one generation to the next. And then, in addition, there are some documents that establish relationships while we're living, one with our finances in the financial power of attorney, and then also the Advanced Healthcare Directive establishes a relationship with the healthcare system. And then finally, there's the will, which allows assets to pass in between generations. And these three legal documents are kind of the foundational documents of your estate plan, a fundamental part of advanced planning. And why this has such a unique connection with tax sale foreclosure is that one of the largest assets in most of our estates is the family house. And that house has a deed to the property, and the person whose name is on that deed is considered the legal homeowner. And when you're the legal homeowner, you can get access to home repair programs, weatherization programs, basically a whole myriad of programs that allow for a little bit of help keeping up that family home. And then in addition, the state has property tax credits. One that sets your property tax credits based on income, and the other one that keeps your property tax credits from going up if your home value goes up over time. But you can only get these programs, get access to them, if you're considered the legal homeowner. So your name's really got to be on the deed to that house. So what often happens is we have multi-generational families living in the same house. If that older generation, somebody passes away, and the house doesn't get retitled in the next generation's name, then those folks are not considered the legal homeowner. So if they have trouble with the property tax credits or the house needs a new roof or something like that, they are not going to be able to access those programs. And then, as we all know, on a tight budget, people start to budget things like this, and maybe you get behind on your property taxes, you miss a couple of water bills, you get a few environmental citations. Basically, you have a number of city bills that start to pile up. If you get behind on those city bills each year, if it's over $750, you can go to tax sale. And that's basically where they auction off liens to these outside investors who come in and basically they pay folks' bills for them. And then you've got to pay them back for the amount they paid plus interest. And that's what's called the redemption process. And basically, it's time consuming and it's expensive. And if you don't get through that redemption process properly, then they can push to foreclose on your house. So it's kind of a domino effect that starts with this deed issue where advanced planning isn't quite done properly, and then the house doesn't really pass fully, and the next generation is not considered the legal homeowner. Then they actually need these programs, but they can't get access to the programs because of this legal issue. And then they end up in tax sale. Now they owe a ton more money. And then in the end, they may push to foreclose on the property. And oftentimes, just for the record, those people actually don't want the home. They just want the interest paid to them. So the house can even end up vacant if they don't even file a new deed in the end. So it really is a house of cards. And advanced planning is one technique where we can kind of get ahead of this, prepare, and be in the best position to hold on to these assets, protect them, and then pass them on to the next generation. So please reach out to Maryland Volunteer Lawyers Service, use our attorneys, get these documents set up in advance, and pass on the home, protect the neighborhoods, and keep everybody safe. Thanks so much.